Everybody, Eric Hendrickson, give me the Mortgage Minute for the week of August 21st. Last week, we did unfortunately see a pretty significant run-up in interest rates. Really, the overall bond market really sold off pretty heavily, and I guess the big question was why? Why did this happen? And I think it was not just one factor, but several. Certainly, we continue to see very strong economic reports, such as the retail sales blew past expectations, so the economy is still rolling along. And that means inflation is likely going to stay persistent. So that obviously brings rates up. Also, just massive treasury issuance. The US government continues to issue treasuries to fund its deficits. So that's something that is obviously going to push rates up. And then also just some kind of one-time situations where foreign countries were selling large sums of US treasury bonds. So the bond market just got flooded. And it really comes down to supply and demand. When there's more supply than demand, yields have to rise to find buyers, and once that equilibrium is met, then rates will level off. So we're kind of still searching for that piece. So kind of going forward, it's really going to be back to looking at the economic reports. So bond investors won't be interested in really buying unless they feel the economy is going to be dipping down and there's an opportunity to grab a decent bond yield before it drops lower. So it's kind of back to watch and wait. I think the forecast still going into next year by all the economists are showing a significant drop in rates, but we're going to have to wait a little bit longer to see that. Next week, we do have an action pack. This week's kind of slow. Next week, huge ADP report. We have the GDP. We also have the PCE inflation report, and then it ends the week with the non-farm payroll. So just super action packed, and it's coming on Labor Day weekend, so the bond trading market is a little bit thinner, so it could be really good or really bad depending upon how those numbers come in, or it could wash out. So this week is kind of probably going to be kind of treading water, but hopefully next week we'll see some moderate economic reports and see some significant improvement in interest rates. But we'll keep you posted. Have a great week.